Goldman Sachs are sending out the warning. They believe after a massive CTA ramp in November, things are about to change. But what does smart money versus dumb money charts tell us about the markets moving forward? And more importantly, are we starting to see weakness in some of the strongest markets recently, with the Dow Jones falling for 2 days straight? Hello, ladies and gentlemen, and welcome back to The Daily Show, where we talk everything stocks, commodities, and cryptos together. The S&P 500 has made it back to these previous highs and is currently quite resilient in the small timeframes. Today, we talk about the dark pool activity that's going on there, along with the flows out of the Magnificent Seven. Will they continue? And what's going on with the NASDAQ? Are we about to hit an intraday resistance that is going to be key? But more importantly than any of that comes back to oil, because we're seeing some falls that have everybody concerned on the markets. Well, welcome back, everybody, to The Daily Show, where we talk about everything to do with markets around the world, including macro lead indicators and the hottest charts. My name's Tom. We've been running this show for well over 3 years now. And if you like anything to do with markets daily, remember to subscribe and smash that like button. Well, let's talk about the markets, and I think you can clearly see there was a bit of a difference. What was weak, which was the big tech stocks, had a bit of a resurgence, but the rest of the market fell off. And that was very prevalent when you take a look at which sectors were actually up for the session. You can see here that we had technology up, we had, of course, consumer discretionary up, and semiconductors were flat. But almost every other sector was down. And we'll get to how important that is very, very soon, especially if it continues. Over 5 days, though, we still have seen a rotation into things like clean energy, which is PBW, TAN, and home builders. And of course, one of our favorites here, which has been biotechnology. Let's talk smart money versus dumb money. I posted this over on our X account, so make sure to follow that in the links down below. But here you can see a huge divergence versus the smart money and the dumb money. Dumb money, which is us, is back above 0.8. And we've seen this happen before. And obviously markets can rise a little bit more, but they do tend to fall off later on. So what is smart money doing? Well, smart money is supposedly selling a little bit into this, and it'll make more sense when you see what Goldman Sachs are talking about in just a few moments. What traditionally has happened from a reading like this is that over the next 2 months, we have seen a fall of at least 0.7%. And although that may not seem much, do remember that in a market such as what we've seen in 2020 to 23, we expect, of course, larger moves. So what's happening right now? Well, of course, this is the chart that we've all been looking at, and it's realistically, when we consider previous years that have had strong gains into November, what tends to happen in December. We're about here right now. So if we're going to see fall off, we tend to see it into the middle of the month, followed by what we call a end of year kind of rally or Santa rally. Will it be the same though in 2023? Well, remember to also subscribe for our VIP free weekly newsletter, because that will be one of your golden tickets towards finding out a little bit more about what's going on for the end of the year. And more importantly, our special reports for 2024. What do we think happens during election years? What are the stats? What does the data present? Let's talk Goldman Sachs here, because Goldman Sachs is talking about CTA modeling going to the downside. So, of course, we've seen, and we will be looking at the fact that almost all the bears are gone. That's the common concept on Wall Street right now. Now, there's no doubt that November was run by CTAs. Goldman Sachs actually reported that $225 billion worth of stocks was purchased through November just by CTAs alone, and it made for a massive gain. So what's happening right now? Well, it looks like a lot of the models which we're seeing coming out from a lot of these banks are pointing towards sideways action to slightly down action. You can see here the one standard deviation down and also the sideways. It doesn't look like there's going to be too many gains, and that makes sense to the options market, which we'll look at soon. So what was notable about the last session? It has to be breadth. We saw over 87% of stocks in the market down. Now, you might say, well, that's just making up for the previous day. Possibly. But if this continues for another 1 or even 2 sessions and we're still going sideways, that's not good. Basically, that's something that we want to be paying a lot of attention to. And you can really see that if it wasn't for the big tech stocks showing a little bit of a relief rally, we would have been down through the session. Certainly worthwhile keeping our eyes on. Sentiment indicators from major banks are also starting to show us being stretched. Of course, we've already seen this with our reads from the AAII sentiment survey, which showed that almost all retail traders are now feeling bullish. But some of the stats would suggest that even though we felt bullish, a lot of retailers shorted the market in November. Now, we've got a stretched position from Goldman Sachs indicator here, showing us again that we're starting to get into those peaks. What about overbought markets? Have we seen these kind of signals before? What tends to happen next? Funnily enough, yes, we have. We've seen here the amount of stocks with RSI overbought going into some worrying percentages. Similar reads such as this, you can see what happens to the markets. And although it's not always guaranteed, of course, over here, the market only dropped a little bit, it does tend to bring us into a cautionary period. So certainly a very interesting read here when it comes to what's going on with RSI, overbought, and all of the market across the board. We also know that panic index is basically at zero, so as close as you can get to it. So it's been a while since we've been this low. And of course, the VIX or the Goldman Sachs indicator for panic as well, they're all very, very low. VIX sitting between 12 and 13.5 at this stage. So what are some catalysts that could bring us down? What could possibly be the reason we might sell off at the beginning of December? Well, it could be some more window dressing, similar to what we saw in October. Well, that was more of a taxation strategy. Or it could also be that earnings revisions are starting to go down. Remember, we talked in a previous video about how most likely the market was chasing those forward guidance indicators, and that was giving us a huge boost in markets. Well, as it turns out that we're starting to see earnings revisions going down once again. And this is after having a huge boost and, of course, a stabilization. If the markets continue to see these earnings downgrades, then we will probably see a rebalance in markets in 2024. We also just posted one of our biggest monthly gains ever. Realistically, it was in the top 20. So we always love witnessing history. It seems like we witness a lot of history since 2020 anyway. And we just had 8.9% shutout for November. Now, what that means is that the next month to 6 months can sometimes be a little bit murky. More importantly, though, we do tend to see a little bit of lackluster returns in the month after. You can see there's quite a lot of reds there. Obviously, there is more greens overall. But I think what that's showing you is that coupled with the smart money, dumb money, with the coiling, with everything that's going on in the markets, shows that this is not the place to be super ultra bullish in terms of stats and the way the market is. And we'll talk about a couple of scenarios later on of what the market may do based on options and, of course, our technical analysis levels. So gold bugs, we've been very bullish on gold here. And obviously, I still have big plans for gold, but the stats were not great for what happened on Monday. And I just want to reiterate this, but I also wanted to reiterate one important point outside of some of the bullish stats that we've brought up recently. Although it seems likely we'll go into some kind of consolidation for a little period here in gold, and we'll continue to follow it, I do want to bring out this chart here, which shows us that central bank net purchases of gold continue to be very, very interesting. So this is what's actually going on here in terms of central bank purchases. Look at them. They're going up and they're certainly feeling a bit bullish about it. And this is since basically last year. Now, it just kind of brings into mind that if you look at bricks, I believe brick purchases of gold has gone up substantially over the last 6 months as well. And all of that has helped to contribute to what we've seen with gold. So still big things to come, I think, on the shiny metal. But for now, we just look for consolidation and breakouts moving forward. And of course, the best next opportunities in that market. So the market pivoted. We all know that everyone expects the Federal Reserve to do some rate cuts. Now, here's one that I thought you might like in terms of stats. 5 weeks ago, the market was discounting 2 25 basis point cuts, okay? Basically through to January 2025. Now it's expecting plus 5 plus. So basically we're expecting 5 and even more is starting to get priced in daily. Now that's telling you that something very worrying is about to happen. And of course, it can also show you why the central bank's been injecting recently in the secret behind doors kind of injections they do. We've got the chart coming up later for that because something probably is broken. We just don't know exactly what it is yet. Expect CDs to also potentially start to drive up, which we'll look at on the show. Copper declines further after China credit downgrade. So of course, we've been bullish on copper recently, and it's been a great price action-based trade. It hit into the 8600s here, which looks different on copper spot, and that's getting into the 380s on copper spot. And then we saw a big downgrade coming in from Moody's, which has sent it back down. We'll look at the charts later on, but obviously if copper does start to fail, that can also be a big driver of markets declining across the board. So let's talk positive side markets, then negative side markets. What do we expect for the rest of the year? Well, this is basically where we are. This is kind of what we expect, which is a bit of a pullback here, ideally, if we're going to play the normal ratios. And of course, we're looking at a coiling market, so we'll look at some of the weakness and some of the strength coming through. And then we'd like to see strength into the end of the year, specifically run by mid and small caps. That would be a good rotation for the markets. We also know that corporate insiders continue to hold their big tech stocks. So even though we're seeing Mag 7 rotation, that doesn't mean that it's over for Mag 7. It just means that it's a pullback in the current run. Now, what about the Federal Reserve's rate cuts? If you're new to the channel, you may not be aware, but if we do get rate cuts, remember it's when they actually do place the cut that you need to be most terrified, not the run in. Generally, markets go bullish into these kind of rate cut scenarios and bearish after it. 81% of losses happening during the actual recession or the rate cutting period versus, because that usually happens around the same time, versus, of course, before it. And on average, this is what we tend to lose. I don't think it's going to be this bad, but 2024 is shaping up to be a very, very interesting year. And I think it's going to be a great one for traders. Let's talk dark pool activity, because we've been talking about a couple of things hitting into their areas. First up, let's talk treasuries. Of course, we've been bullish on treasuries, and we've been bullish for quite a period of time, especially down here. Now, we're in that area where I could see some sellers coming through. Of course, we just got a plus 2% day. We'll talk about yields soon, but we're back into a very key point of supply. So over here on the left-hand side is basically where we see supply and where we see some resistance for this market. Maybe there'll be some profit takers coming through on treasuries very soon. So just be wary of that. We've also seen some big trades coming through on a couple of major indices. First up, let's talk about 3 times S&P 500 funds. We've had some downward pressure off this point here, and we just reached it back. And of course, we know there was a huge trade on it the other session. So the rally of the last 24 hours may be met by sell demand based on at least what has happened with the price action there. We also know that semiconductors have just had a fairly large entry into the bear side. This marks basically, you would say, maybe +4 or +5 large trades we've seen into different semiconductor ETFs over the last week, I would say, since we've been coiling. And it could show that some profit taking is coming through, which is what Morgan Stanley's basically been telling us. Another one of our favorites recently of the lows has been TAN, so that's solar, and we saw another large trade. If price action does come with it, and we actually see price action starting to increase, that's going to be a positive sign telling us that these large trades are more than likely buys. They're probably big buys, and it could be the bottom for that particular market sector. So we talked about options a little bit here on the channel, and we're going to start bringing in a little bit of gamma exposure and talking about that. Now, we're obviously trapped at this stage. And I think the interesting level here is 4630, because if we're basically trapped between 4570 and 4600, but 4630 is a possibility. Effectively, markets are sitting within a range here. They're coiling up tight, and that is allowing realistically a little bit of options play on the small timeframes. But what happens soon will be interesting. We'll update this chart throughout the next weeks as we go through into the OPEX, because really what's going to be most interesting this month is the 3rd week options expiration. But if you're a TA analyst, you will be very clearly looking at 4630 should we get there, and the way in which the market reacts to that zone. Notice the deep red. It's going to be a very interesting level. Let's talk actual options across the board now. We saw 35 million, which was a bit low, 57% calls, and retail traders at 28% of the single legs. So we were pretty heavily trading, even though it wasn't a huge options day. And of course, we do know that we've got a pretty good equilibrium between the puts and the calls at the moment on the major indices. Some notable things that have happened is, of course, we did see a couple of large trades come through on some of the big stocks. We've also seen some decent trades go through on treasuries recently, with more calls coming in than puts, which is interesting because, of course, that was heavily put run only a few weeks ago. And then we have some other interesting levels here. PayPal getting some interest on it at 1.34 times average, and you can see the rest here. So plenty of options activity recently. The notables all in this one in terms of unusual 90-day trade volume. Let's move over to the charts. Now, this is where we're watching effective yield rates. We'll be watching this one quite closely. A little bit of a spike up Obviously, nothing to note yet, but the first sign of a little bit of weakness in the underlying market. We need to be careful on that one. We also saw equal weight market fall off a little bit, showing us that of course, 86% stat or whatever it was, 87% stat of bearish stocks in the market being held up just by tech. That started to come through, and it makes sense. This is a profit target level for a lot of people that were trading the equal weighted market, and I'm sure many people were. What about our bond indicator? That's still pretty positive. Dropping yields, obviously acting in a positive way here. If this starts to turn down, we certainly need to be worried about the markets, especially if it's happening if we're driving higher. Because whenever that disagrees, something bad's going to happen. Bond market, you need to be paying attention to it. So, of course, subscribe to the channel. We'll be following that one quite a lot. What's going on in treasuries? Treasuries hit our yellow little line here. They're obviously in our supply zone or the box. So anywhere in here is where treasuries could find weakness. Of course, huge volumes recently. And I think that this is the zone where I could see some profit targeting come back in. Let's talk options in terms of put-call ratio. That started to drop off, showing us that calls are on the increase. And this, of course, allows markets to potentially turn down as well because we're getting less puts. It's pretty much one of the cheapest times ever, according to Goldman, to be hedging portfolios. So that's something that a lot of options traders have been doing because it's cheap, and therefore you can hedge or partial hedge some things, and it's really not been cheaper for a very, very long time. Dow Jones Transportation Average found its first little signs of weakness after breaking that new high, something we will be watching. Home builders obviously pulled back slightly in the last session, but still really nice after coiling and breaking through, again showing us that we should be able to drive higher later on in December. And liquidity feeds from the central banks, both the green line and this purple line here, you can see that we're starting to see a little drop off on them, but nothing to note just yet. Of course, they have been driving higher, and this has been helping this market be so bullish. Copper is in the level we want it to hold. We've got obviously an alert underneath this area here, but this is exactly where we'd like to see copper find some strength. And if copper fails here and it moves down below, again, could be a sign of pullbacks coming across the rest of the market. So copper, one to watch. They call it Dr. Copper for a reason, because if it starts to weaken, it shows economic, let's say, worries, and no one likes to see those, especially if you're a bull in the markets at this stage. What about dollar index? It's climbing higher, but I wouldn't really say it's out of the woods yet in terms of strong dollar. We're back in the resistance area. Everything in here is supply. Everything in here is potential weakness or resistance. So yeah, be careful up here for dollar bulls. I think this is the kind of area where I could see some profit targeting. If it breaks through, then we'll of course have a much more bullish stance on dollar in terms of pullbacks coming through. What about gold? Well, it didn't quite rally as much as you would hope initially anyway. Now for gold bulls, I'd actually mark out this little high here, and I'm going to do that right now together. I could see it still driving up. So what it could do is it could kind of drive through this level, keep driving up, drive up into the 2000, maybe 70 zone, and then maybe sell off from there. But I do think it's in a structure. So what it needs to do now is it needs to just kind of figure out what all this was, get some structure build on, and then really you're trading it a bit more nimbly now at this stage. You're not going to be super heavy bullish on it because unfortunately it wasn't able to hold above. And now I'm also going to set an alert above 2146 because I actually saw some places claiming it went to 2150 on the spot. But yeah, 2146 will be a level here. And if it gets past that, then of course it is on. It's going to be squeezing again. But at this stage, yeah, consolidation on gold, worthwhile paying attention to. Gold stocks could still move up, but yeah, consolidation. Take a look at oil though. This is a chart that we're all watching. And because at this stage, oil looks so weak. I mean, it's been coming down. The weekly looks absolutely horrible. We know that if oil drops off, there's a good chance it goes to 69 to 67.50 around this area in here. That's where we expect the next buys up. I'd still say this looks pretty bad. I mean, weekly has nothing good to say about it just yet. Look at that big rejection. And of course, if it closes like this, we're probably moving into that 69.50 to 67 area. So yeah, weakness in oil. That's telling us again, be a little bit cautious here. It is good for yield plays. So realistically, if oil continues to weaken, often that tells us that the US 10-year is going to go down even further. But notice that the US 10-year is still in our box. So even though it dropped over the last 24 hours, this is still the area where we could see spike ups for the US 10-year, 20-year, and 30-year. If we do, then of course that's going to drive into market bearish sentiment. So make sure to watch the 10-year, watch the 20-year, and have them on alerts. Maybe a suggested level to watch would be 4.3. So we'll set an alert there together as well, just so we've got that covered. What about Tesla? Everyone's asking this question. Still coiling and still not broken out either way. If you were a Tesla bull in the last 24 hours, you would have got a really good opportunity because, of course, where did Tesla come down to? That 232, 233 level, and it found those strong buyers. It's still coiled within a range. We can see the weekly had a lot of rejection wicks on it. And if we break underneath 230, I think that we could be seeing further downside, maybe even to the 210 level to 200 zone. So certainly Tesla is both on the weekly a bearish and a bullish kind of option. We could move higher. If we did, then we'll really break out to the upside. And of course, we've got the downside. Remember, the trend line on the top is much stronger than the bottom one. So that's something to note. Semiconductors weakened, then of course found some strength, but we do know that there's a lot of dark pool transactions going through this, which could show us coiling or sideways action for a little period here. Biotech continues to find relative strength, only it's down 0.4% on the day, but obviously approaching that 124. This is kind of like the dash for trash. A lot of bios don't make money, so rotation. This is one of the charts. Again, another chart that was starting to find some rotation as well was solar, which we talked about just before. So if that breaks out, could be quite strong. Let's have a look at the German market and indices now before we go to the American markets. And this one is just squeezing. Now, I've got a stat, and I've posted this on our X account quite a few times. I think it's 86% that retail is bearish on this. Now, we've already marked out this blue zone before, saying this is the point to be cautious, but this market is just squeezing everybody. It's just destroying everyone that's trying to short it. You don't want to ever short anything without some form of structure. So remember, patience, react, don't predict. You might like this level as a short, fair enough. I can totally see why. But of course, the market has continued to plunge, move higher, and people are starting to scream at me about this DAX. They're like, how is this possible? This is what happens sometimes in markets. It's pushing those huge amounts of shorts and just taking all their money. It's unfortunate, but that is what it does. US 2000 trading around the most traded level, just kind of creating structure. Not much on that one today, but the Qs are interesting because if we have a look at the 2-hour chart here, you can see the Qs came down, then they rallied up. There's actually a gap fill here. So I'm just going to move one of these old gaps from over here just so you can see it. So you can see there's a gap fill at around 390. So 390 on the Qs equals around 16,000 on the futures. So if you look at the futures, it tried to come underneath. We didn't get any new low here. So you can see that that's something that we'll be looking for because new lows could bring in 15,500 and also 15,250, most traded zone, something we're looking for. And I think around this 16K is going to be where the bears sit if they're going to sit there. Now, that's the Qs, certainly the weakest looking market at this stage. Remember, if the Qs bust to a new high, that's going to be a big squeeze option. And of course, we're going to go towards 16,400 and maybe even higher points. Just remember that 16,400 is a big deal because this puts us into those new all-time high territories. So something to be watching. As you can see on the weekly, if it closed like this, it would look quite strong because you've got that big wick rejection. But it's not over yet. We've got non-farms, jobs numbers, all these things coming. S&P, here it is. So we're in that kind of sideways action. If you look at most seasonal years, the way the market kind of trades is like this, and then it rallies up. So it's expected to trade sideways usually to the middle of the month. Of course, we've taken into account the strength at the start of the year, which has given us a little bit of downward play in terms of what traditionally happens. Do remember as well, we have this gap at around 4,400 that we should be watching as well because that was completely gapped thanks to that CPI data. So we're still trapped in the sideways. We're still in that kind of red zone. Now, we spoke before about the idea of a 4630. So 4630 would take us to a new high. Let's have a look at futures here for a second. So 4630, of course, we've hit 4600, 4611. So what if the market was to do this? What if the market was to go 4630, sell off, come down, move into the 4400s, hit all of these green squiggly lines and all of this structure that's down here, and then rally up? That would be pretty much perfect if it did something like that. That would be awesome. But 4630 is an interesting zone. So I would probably put an alert there just in case. At the moment, the S&P has shown zero weakness. The NASDAQ has, the Mag 7 has, all of those markets, they're showing weakness. I mean, if we look at the Magnificent 7, which we have here, you can see it's still weak. It bounced off the first level of structure. We've got an alert underneath that. It's rallying up. This is where usually you'll get that roll reversal. You'll get those sell-offs coming through. If they're going to happen, it's very close to where we want to see that occur. Obviously, 16,000 on the NASDAQ is going to be interesting. This level here is going to coincide with that. And we just saw 87% of the rest of the market actually be weak for the session. So, of course, if tech starts to weaken off, well, the whole thing's going to fall a little bit here. US 500, though, 4630, worthwhile paying attention to. And, of course, we're looking for new lows and new alerts. And we just don't have that in the S&P at this stage. Let's move to crypto now for a minute because, of course, everyone's talking crypto. And 44,000 reached by Bitcoin. Not quite at our targets yet. 46 to 47 is the beginning or really the end of where I think we're kind of going. And we've spoken about that quite a lot. 39.5 was our original. 46 to 48 was our main, and we're still moving there. 42,000, certainly not a bad place to be descaling your position a little bit if you were doing that. But yeah, it looks like Bitcoin's going to try to go for that 46, 47 narrative. And if it does, then that's going to be a very interesting point because what tends to happen is you tend to see a rally followed by a dump, followed by a halving cycle. So that's something we're going to be looking for here on Bitcoin, and we'll be watching it very closely over the next coming months. I'm excited for everything we spoke about recently, all the way into the halving and all the way after it, because crypto, it could be coming through. We'll start looking at ETH-BTC as a ratio as well moving forward, so make sure to sub for that. What's going on this week? Well, of course, we know that it's jobs numbers realistically on Friday. They're the biggest thing. We've got a bunch of other stuff coming through, as you can see, through the Wednesday and Thursday, but 8:30 a.m. New York time is the one to watch. And another thing, if you enjoyed today's video, make sure to subscribe, smash that like button, guys, and also join our VIP free weekly newsletter. Edition 2's just gone out. I hope you enjoyed it. Plenty of new stuff coming, and I've really enjoyed writing it. So thank you very much, and we'll see you in the next one. Bye for now.